Hey, what's going on? Scott Taylor with San Diego Real Estate Hunter.com. In this video, I want to break down the 3.5% down FHA loan for several reasons. Number one, as the name suggests, you can put down as little as 3.5%. You get a loan amount up to $701,500, which is about a $725,000 sales price. And of course, you can take advantage of the extremely low FHA interest rates right now. Think low to mid to high twos, depending on what your credit score is. And of course, if you're finding value from this video, I'd really appreciate it if you would smash that like button, subscribe to get more hard-hitting videos just like this, and tap the notification bell so you never miss a video. As always, look below the video. There's going to be some show notes that goes over everything that I'm talking about. There's going to be some links to some other sources. And without further ado, let's get into it. So number one, you do not need to be a first-time home buyer for an FHA loan. You could have owned before, you could have never owned before. It does not matter. This will work for anybody who's looking to live in their primary residence, right? Or called owner-occupied. It's not good on a second home, it's not good on a vacation home, and it's not good on an investment property that you're not living in. So this works for any livable home, PUD, which is a planned urban development, not as many in San Diego, townhome or condo. And don't forget, look below this video. It has to be, if it's a townhome or condo, it has to be an FHA approved townhome or condo complex. I have a link below the video, or you could simply Google FHA approved condos. You will find a link, and it needs to be on that list. Just so you know, something around only 5 to 10% of all townhome and condos are on the FHA approved list. And it needs to be a livable 2, 3, or 4 unit, right? Duplex, triplex, or quadplex that you actually live in, okay? I personally do not deal with anything as far as land loans. I don't deal with anything as far as mobile homes. I don't deal with anything as far as manufactured homes. So as the name suggests, and I've mentioned, you can put down as little as 3.5% for this loan. So here's the cool thing, more numbers below the video. At $300,000, we're looking at for a down payment of around $10,500. For $400,000, we're looking at a down payment of around $14,000. $500,000, down payment around $17,500. $600,000, right around $21,000 down. $700,000, right around $24,500 down. So here's the maximum loan amounts for an FHA loan right here in San Diego. Now don't forget, these are loan amounts, not sales price. So it's loan amount. The max loan amount for a 1 unit is $701,500. The max loan amount for a 2 unit or a duplex that you're going to live in and probably rent out the other is $898,500 loan amount. The max loan amount for a 3 unit, going to live in 1, rent out 2, is $1,085,550. And max loan amount for a 4 unit is, so you're going to live in 1, rent out 3, is $1,349,050. Why we have these weird numbers at the end, I have no idea. So the maximum debt to income ratio that is allowed on an FHA loan is this. You can go up to just under 47% on the front end. That means your total housing payment, and just under 57% for total debts on the back end. So let me simplify for this, okay? Let's just assume you make $10,000 gross per month for a 12-month average, so we can lay out these numbers. So on the front end for your total housing payment, we can go up to just under $4,700 for a total housing payment if you gross $10,000 a month, and your total debts can be just under $5,700 per month, right? Total debts means whatever's on your credit report plus your future housing payment is total debt divided by average gross income. So we can do $4,700 on the front end, $5,700 on the back end as the max. I'm not saying that you should want to do that. I'm just saying that's what the max is. So this loan works perfect for anybody that has a full-time job or business for 2 years or longer. And don't forget, It's not limited to first-time home buyers. It's not limited to anything as far as income. And of course, it's perfect for those that have less than perfect credit. So the down payment and closing cost money can be 100% gift from parents or another relative, an employer, an approved charity group, or a government home buyer program. So even if you don't have that 3.5%, and even if you don't tack it on with the down payment assistance program, you can get 100% gifted by those things that I just listed. So being approved with over or something around 40 different wholesale lenders in the state of California, I have probably 5, 7, 10 FHA lenders that specialize in an FHA loan. Specific lenders, what is the word that I'm trying to think of? Specialize, thank you, in specific loans, okay? So I have different lenders. If you're looking to put down 3.5%, I have different lenders that go down to about a 580 credit score. So your middle credit score, don't forget if it's just you, it's a middle score. If it's you and a co-borrower, we use the lowest middle. That has to be a 580 or higher. Obviously, generally speaking, it's better if your credit score is above that. So here's the waiting periods on an FHA loan if you've had these items. So if you've had a Chapter 7, it's 2 years from the discharge date. If you've had a foreclosure, it's 3 years from the foreclosure date, and that's when you're actually kicked out of the property and you can't occupy it anymore. And then it's 3 years if you've had a short sale, okay? So now why don't we dive into some typical questions and answers that I get on the FHA loan. So a question, can I use the FHA loan in conjunction with one of your top down payment assistance programs? Yes, that's exactly how it works. You get the 3.5% right down that's needed for the FHA loan for a loan. You get that covered. Then we do a 96.5% FHA loan for your actual loan. That's 100% financing, okay? So that's exactly how that works. If you can't get gift funds for the down payment, and if you don't have the down payment, you can use a down payment assistance program with an FHA loan. That's how it works. So if you've had an FHA loan before, can you get one again? Yes, 100%. You can have, it doesn't matter. If you've owned before, you've an FHA loan, even if you foreclose on the FHA loan, that's fine. But you can usually only have one FHA loan at a time, right? Because you have to live in the property. That's why. So another question, why would I go with an FHA loan over a conventional loan? That's a great question. So the down payment on a conventional loan, right, is 3%, but you can only go up to a $510,000 loan amount. The down payment on an FHA loan is 3.5%, but you can go up to a $701,000 loan amount, okay? The FHA loan allows a higher debt to income ratio, those things I just talked about, and overall, they allow a lower credit score. So when you can put down less, if we go to higher loan limits, when your credit score can be lower, when they allow a higher debt to income ratio, they have faster time frames if you had a foreclosure or short sale or Chapter 7. So obviously it's easier to get an FHA loan. Okay, Scott, so you've mentioned the positives. What are some of the negatives to the FHA loan? So here's some of the negatives, right? There's always negatives, positive and negatives to every different loan. So here's some negatives. With an FHA loan, you pay what's called a UFMIP. That's at 1.75% upfront to get the loan. That's very similar to a VA loan. That's very similar to a USDA loan. You do not have it with a conventional loan, but with the FHA loan, you do. So it's called the UFMIP. You pay that upfront. It's wrapped into your loan, so you don't actually pay out of pocket unless you want to. Usually nobody does, but you have to pay that. Obviously on a monthly basis, right? You have the mortgage insurance premium, so you pay it up front, and then you also pay it monthly. Again, that's financed into your loan, but you should be aware of that. Something else that's important is these are for primary residence or owner-occupied only for an FHA loan. And don't forget, if it's a home, it's livable, okay? Home, PUD, townhome, condo, it's livable. If it's a home or a PUD, you don't have to worry about if it's an FHA-approved complex. That does not matter. But if it's a townhome or condo, it has to be an FHA-approved townhome or condo complex, and there are much fewer than if you didn't have to do that. Question, if I have just enough for the down payment, is there a way I can get my closing costs covered? Yes. So there could be, basically 2 or 3 ways that we could pay closing costs, right? I'm licensed to do real estate. I'm licensed to do loans. When you work with me as your buyer's agent, I do both sides. Okay, so I can help you with the real estate. I can help you with a loan. It's a one-stop shop. But how we structure the offer is this. We can ask the seller to pay your closing costs, number one. We can use what's called a lender rebate. You qualify at one rate. We do your rate a little bit higher. There's a difference right there. There's money on the back end. It's called a lender rebate, right? Or a no-cost loan. We use that to pay your closing costs, or obviously a combination of both, right? We might ask the seller to pay some of your costs. We might use a lender rebate for some of your costs. And get them covered that way if we're trying to limit your cash out of pocket besides your down payment. Okay, cool. So here's the steps to begin. Look below this video. There's apply for loan. Go to my main website, SanDiegoRealEstateHunter.com, or go directly to ScottsLoanApp.com. In 10 minutes or less, you can fill out my online application, whether it's from your computer, smartphone, or tablet, 100% safe and secure. Once you're done with that, you log back in, you answer a few more questions, your application is completely done. Takes 10 minutes or less. From there, you upload your needed supporting documents. It's very simple, only 5 things. Copy of your driver's license, last 30 days paychecks, last 2 months bank statements, all pages, last 2 years tax returns and W-2s. By the way, if you don't have those, Google IRS tax transcripts. You get them completely free online. And then finally, if you have anything like stocks, bonds, mutual funds, retirement accounts, etc., we just need the latest statement for those. That's it. From there, you fill out the application. You provided your supporting documents. I am going to take a look at your application. I'm going to take a look at your documents. Then I'm going to run your credit. We use your lowest middle score to qualify. Then I add up your minimum monthly payments on your debts plus your future housing payment is your total debts divided by your average gross income. It's your debt to income ratio. So I report back what your max loan amount is going to be, what your interest rate might be. Obviously, it's not locked in. And then the best way that we're going to structure the offer to limit your cash out of pocket. Cool. If you want to watch some more videos in the series, obviously right now you're watching one on the FHA program details or else the loan highlights. There's another one on some secrets I think you might want to be aware of for an FHA loan. There's another one regarding questions and answers, some of the most popular ones that I get. And finally, there's another one that goes into the loan documents that we need. It's those 5. But if you have some other things on your credit, I go into what we're going to need for those. Once again, thank you so much for watching this video. If you've liked it, I really appreciate you smash that like button, subscribe to get more, and always tap that notification bell so you know when a video comes out. And of course, don't forget, I want to help you buy in San Diego. So if you're looking to buy and get a mortgage loan specifically for an FHA loan, shoot me a call, email, or text, and I look forward to chatting with you and helping you sometime soon.